Record this. Now we're recording. Perfect. All right. Let's answer some more questions while we're waiting for everybody to get back on here. It's all about price action from Vladimir. Yeah, I would say, yeah, you're right, Sherman. I do need to get in the habit of recording. I would say that price action, price really just doesn't lie. Numbers don't lie. Price doesn't lie. But indicators can be really contradictory at times, and that's why I don't use indicators most of the time. The name of the book is Fibonacci Trading. Let me go ahead and type it in here. Fibonacci Trading by Carolyn Borodin. That's one of the books I'm reading currently for Fibonacci trading. Really great book. Okay. So let me get back into this analysis really quick, and we'll save some questions for later. Let me go ahead and do that. Okay, cool. So we're back to like 53 participants. Let me go ahead and take a picture of this. This is great. This is fantastic. Amazing. Dang. All right. Okay. So I'm going to go ahead and explain more in detail now that I have a lot more time to explain to you guys how, how supply and demand is really effective. And it's more or less, the same thing that you've learned in the basics. If you're already in iMarkets Live, it's the same thing that you've learned in the basics of support and resistance. It's just a little bit more complex because you're dealing with what we call institutional order flow. So we're talking about big names here like Goldman Sachs, JP Morgan Chase. We're talking about big money, moving price. Okay, I want to tell you why the Japanese yen is potentially one of my favorite. Pairs to trade. Now, the Japanese yen is one of my favorite pairs to trade because, and I hope you guys take this note, it's a safe haven currency. So if something screws up in somebody else's economy, like some kind of let's just say that Korea launches a bomb, right? We're not going to see the U.S. dollar climb up anytime soon. What we're going to see is the Japanese yen being invested in, because avid investors are going to go to the Japanese yen. Why? Because if there's turmoil in other countries, then there's going to be confusion in the market. So what that simply means is that we move our money from the U.S. dollar to the Japanese yen because it's one of the safest. Along with gold gold is also a safe haven. It's technically a commodity because the Japanese yen has a positive correlation with gold. I think it's actually a negative correlation, but we'll get into that later. What I'm saying is that safe haven currencies and commodities are being invested in when avid investors see that there's turmoil in other markets. Say, like I said, that the trade war in China between the U.S. and China, right? If we're having a trade war with China, guess what that means? There's going to be some kind of indifference in the market. There's going to be some kind of confusion in the markets. So fundamentally, what I'm thinking at that current point is, okay, so I want to place some rather small lot sizes into my Japanese yen pair and wait for the break to the downside and then start stacking my positions. Okay, so why do I do that? Small positions first, down. Small positions first when I wait for the break. Okay, look at this. So this is something that I spotted back in February. I called this trade back in February 11th, February 12th. I don't think I told you. I don't think I had the I didn't have the channel up yet at that point, but this is what I did. I went and looked at this channel, and this is one of my favorite techniques. I want you guys to take notes. This is important. Channels are some of the most powerful indicators known to man when it comes to trading. In my honest opinion, I love channels because I can tell, not can't tell, but I can have a somewhat of a decent prediction where price may go on calculation, on experience. So we've noticed that in this specific channel that there's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 9 touches in this channel. What I define a channel is at least 5 to 6 lower high of highs and lows touching in a similar price point. Okay? So now that I have almost 9 to 10 touches specifically in this area on the daily, if we look back to 2016, it's been ranging in this area. Actually, let's move this horizontal. Okay, so we've been ranging in this area since 2017, the very start of 2017. We didn't break out until literally February. So it's been almost a year since we've been ranging on the daily. Okay, why is this important? I'll tell you why this is important. We're going to do Q&A at the end of the webinar, about 10 minutes before the webinar ends. Why is this important? This is extremely important because I do not have a trend. I'm going to say that again. I do not have a trend. If I'm a trend trader, what am I going to be trading? I do not have a trend on the daily. Now, let's look at the pip amount in this area. Actually, this is why I love trading in channels. There's a 600 spread. There's a 614 pip spread in a channel. Think about that. Think about how powerful this is. You remember when I said, whenever I was talking about supply and demand, when I was talking about support and resistance. So I have, if I'm correct here, let me go to my, so I have a supply zone here. Oops, spelled that wrong. Okay. So long term, let's look at this. If I were to take a sell, I would actually say, okay, so I've got 1, 2, 3, 4. Now I've got 4 touches here. This is a pretty decent sell, right? Why? I'll tell you why. There's only one indicator that I like to use. I don't use indicators very often, but I'll only use it to confirm one thing, and that is divergence. Okay, so this looks a little odd, and I'll say why. Because if you look at this, there's more volume in this high than this high. But guess what this does to you? That's this retail mindset that I'm talking about. Okay? I'm going to show you something that really I feel like is very important. If you zoom in a little bit on this chart, what do you notice? It's not the highs, it's not the candle wicks. It's this. Gap. Gap. Okay? Now, funny thing is if you measure the volume, you can measure the volume by just looking at the body of the candle in all of these candles, okay? The thing is that banks are going to sit here and they're going to show you a bunch of retail they're going to show you retail. What do you call it? Retail patterns. Okay, the retail patterns are this. You're going to see a bearish engulfing, like right here, right? I have a problem with this. Let's look. Okay, so and this is the funny part. So we have a bullish engulfing, right? They're going to show you this is a retail sign. What they're doing is they're collecting orders in this area, and then they're moving price away for a minute. They're going to show you a little bit of a buy. They're going to come back. They're going to either stop you out or your stop loss is a little bit below. They're going to come back and touch again. Notice that the wick was right here. Wick was right here. Wick right here. Wick right here. Never ever closed above this never even closed above this zone where you have what, 1, 2, 3 areas of resistance. So in my supply zone, what I'm seeing is this. I'm seeing, okay, there's a gap here, which means this is a supply zone. More often than not, so gaps will show you supply and demand zones, period. Supply and demand zones, period. Okay. The reasoning for that is because guess what? There's a jump in price. They're moving it as fast as they possibly can away from the retail traders. A gap to other people is going to signify, oh, it's going to cover this gap and continue down, right? There's going to be a bunch of different signs to retail traders that just don't understand what they're trying to do. You're not understanding what the long-term move is going to be, what the actual intended move is supposed to be. I'm going to teach supply. I'm going to teach Fibonacci, and I'm going to teach some trend analysis and all that other stuff after probably next week. But I want you guys to take this in first. I want you to take supply and demand in first. So what did I notice on this again? I entered another trade. I think I entered a trade right around 111 back in February. There it is right there. Here I saw this, and right around this area where I saw accumulative orders is where I entered another trade to the downside. Okay. So now we notice that in a supply zone, there's also divergence. Divergence is a huge key factor for me. Why? Because it shows the reversal in the trend, or it shows the reversal period. It shows the bounce period. It just shows, it's kind of like a confirmation to me. I define divergence in a different way than probably a lot of other traders. I define divergence as a key proponent to a huge move to the downside. What is defined? What defines a divergence? It's the volume in the candles, the difference between the bears and the bulls, the buyers and the sellers. So look at how much, I want to show you something. Look at how much volume. Let me grab my annotator here. Look at how much volume is in these candles. Bam, 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 bam. Not very much volume in these green candles, are there? Not very much. So I want you to know that when you're looking at supply zones as a short trader, now let's look at it as from a long trader, from a buyer's perspective. So I come in here and I look at this zone right here. This zone right here is super significant to me because it's a demand zone. What does this demand zone do for me? Well, I'll tell you. My demand by demand, I have to have a higher price. Otherwise, I won't make money, right? So say that I were to sell you, say that I were to sell you a pair of sunglasses, like Gucci or something, right? I've got about 20 pairs of Gucci, and about 50 people want to buy 20 pair of Gucci sunglasses. I'm going to raise the price because there's a demand. So that means that, where's my drawing tool? Oops. Okay. So that means that, okay, I've got 50 buyers and I have 20 articles. Boom, I'm going to raise the price. But if I have 50 Gucci sunglasses, or if I have 50 sunglasses period, what am I going to do? I have to sell them off, so I have to put them on clearance. So I have to lower the price. Right? Does that make sense? Supply, demand. Supply, demand. Drop a 2, actually, drop a 3 in the comments if that makes sense to you guys. Does supply and demand make sense to you guys now? Remember, I'm going to put the recordings in the channels so you guys can go back and look at this. Awesome. Okay, so divergence. I'll show you an example of divergence. So say like right here. So you notice that, let me go ahead and zoom in a little bit. Okay. Without the RSI, what I'm looking at is I'm looking at the volume in the candlesticks. So if I have a huge amount of volume in candlesticks, that's going to show me kind of like this. Okay, so this whole full body candle, this green candle right here, full body, right? That just simply means that buyers are in control at this current moment at that price. Okay. But if I have a lot of wicks like this, 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 that just shows me that now the buyers are becoming exhausted and now the sellers are coming in. This could have been, honestly, this right here could have been news, quote unquote, what they like to call news, but not really. That was more than likely, that was just more than likely the, if you can tell from this perspective, from my perspective, this is what it looks like. Oh, I can clear my drawings. From my perspective, what it looks like from here is accumulation of orders. Like they're accumulating your buy stops, your sell stops, your sell limits, and your buy limits, and they're trying to stop you out wherever they possibly can. That's what wicks are. Okay. Now let's look at it from this perspective. Say that if I'm still looking for divergence, let's go over here. Let's give you a good example. Oops. Okay, let's give you a good example. So right here, this is a great example. I like this. So I'm looking at right now, currently, I'm looking at, if I'm looking at this price point, right, I'm looking to go for a sell because it never reached back into my zone. That can show me that there's different ways to determine, divergence. And divergence is simply whenever you have a higher high, kind of like, say that this high right here was up here, right? Say that I had, just theoretically speaking, say that I had a candle, or come back. Say that I had a candle reach all the way, what the heck? I'm trying to annotate over here. There we go. Say that I had a candle reach all the way up here and just fill the whole body up, right? Fill the whole body of a candle right here, right? Okay, so now this is the technical version of divergence. So I'm aligning that, okay, I have this high right here. I've got this trend line drawn from my base high, and this is where current price is at this current moment. Okay? But my RSI shows something different. It's not really going high. It's not really going higher high. This may be a higher high on the chart, but it's not a higher high on my RSI, right? It's a lower high. So that's really what determines divergence. But you can also determine divergence, like I said, in the candlesticks. See, I don't really look at like candlestick patterns, because I just purely trade supply and demand or Fibonacci. So now what we're going to go ahead and do, let's open it up for questions really quick. Does anybody have any questions so far? Now you guys understand fully RSI, how the RSI works, how you can implement your RSI. Drop a 3 in the comments if you guys understand divergence, supply, and demand. Perfect, 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 perfect. Amazing. That's awesome. Are you guys getting excited up in here or what? Drop a 1 if you guys are excited. Drop a 1 if you guys are getting excited about this. Sheesh. People's accounts are about to blow up. You guys are about to blow up. All right. So I had a request, and this is one of the pairs that this pair right here, actually NZD, or not NZD JPY, USD JPY. So my current bias, I'm going to be honest with you guys. Here's what I'm going to tell you. From my current bias, if we reach this demand zone, what I'm looking for are 2 simple things. I'm going to go ahead and take this out. I'm going to move this over here and move this right here. What I'm going to look for are 2 simple things. I'm going to look for it to, let's go zoom in a little bit. Yeah. I want to, all right. So we have already, let's go ahead and like determine if we're in a trend or not. So it looks like to me, we've broken a trend line technically. But what I'm really going to look for, I'm going to actually kind of like make that a little bigger. I don't like having it small. So what I'm looking for is a big candle to the upside to break this zone. And if it does, I'm going to have it, I'm expecting a retest, bounce, and continuation. Okay. So I want you to think about this. I want you to write this in your notes. If you have a breakout from a channel, what you're going to wait for is the retest. I'm going to say that again. Retest or no trade. Retest or no trade. Okay? So now what we're going to look for is another scenario. If, say that it comes up to the price point of 108.25, which is a quarter level, and it bounces, right? It could do one of 2 things. It can do a continuation, or it can still test it again and then make a continuation down. But as you can see in this current right here, it's already tested the supply zone, which is called this. Once it's broken this demand zone, it's no longer demand, it's supply or resistance. It's already broken it through with a huge candlestick. That's one of the criteria that we're looking for. If it breaks through a demand zone, you can sell it. You can sell it. So now what I'm looking for USD JPY, since it's touched once, not once, but twice 3 times. Let's go ahead and extend it. Okay. We're in a demand zone. So if it breaks, I'm looking for a huge candle up to break the demand zone. Once it breaks, then we continue to buy. But if it retests, we sell it. Simple. It just sells. So what we do is we look for the sell to this zone right here where this ray is drawn out. Okay. Our entry would technically be, in my honest opinion, I would put my entry right here. Why? Where in the world did I put that thing? Okay. Okay. Why? Because I want, okay. Yep, that's what I wanted. Why? Because I want to see a retest. I want to see a retest of this level right here or this level. Because it's already broken here. So what I'm going to look for is a sell stop. I love using sell stops. Reason why, and this is one of my personal things. Oh, cool. 10 minutes. Awesome. We've already taught a lot of stuff in here. So after this webinar, we're going to be done, and I'm going to go ahead and actually buy the pro version so we don't have to have a time limit. But why would I put a sell stop? Because once the trade is in motion, once it's in momentum of 20 pips, write this down. The reason why I use a sell stop is 20 to 30 pips in momentum in the expected direction. That is where I'm going to place a sell stop. Sell stops are designed specifically only for, and I'll tell you why, okay? Say that I placed a sell stop right here, right? Let's just say this is my sell stop. Okay, so say this right here is my sell stop, and I'm waiting for price to come from right here, right? Now, if I have a harmonic pattern up and I see that it's going in that direction, I'm going to place a sell stop simply because I don't feel like a sell limit is necessary. A sell stop is when I take price and I see price move and continue in the direction. Sell limit, this is just in case if nobody knows what these are. But a sell limit order is when I see price floating right up here and then it comes, oops. Yeah, there we go. And it comes down right here. I'm going to have to learn how to do this thing. Comes back, retests, because it's already what it is it's already below the sell limit. So what it has to do is it has to come back up, touch, and then come back down. Right? That's what a sell limit is. All right. So what we're going to do is I'm going to go ahead and open this up to Q&A. So in case you guys have any questions, just ask away. We've got about 7 minutes left in the webinar. So what kind of questions do you guys have? Let me know if this is actually useful to you guys. Drop a 3 in the comments if this is going to improve your trading strategy. If this is going to turbo boost your trading strategy. Because we still have a lot of stuff to cover between now and the rest of our lives. Wow. Sheesh. This is only, just remember, this is only one part. This is one ingredient of your secret sauce. One ingredient. We haven't even covered the rest of the stuff yet. A revision of divergence and RSI, and for you to sell where you look for confirmation of exhaustion. Okay. Casey, I'm going to come to your divergence here in a little bit. Mercy FX, when I look for a sell confirmation, normally what I'm looking for isn't necessarily exhaustion, but wicks are part of it. Definitely, wicks are definitely part of my selling strategy, and also just multiple touches to a specific area. So these multiple touches just kind of show me that, okay, 1, 2, 3, 4, 5, 6. Well, it may look like an obvious place for me to sell because it's a huge supply zone. It's a huge resistance zone. It's a huge psychological zone to sell. Okay. Does that answer your question, Mercy? Awesome. All right. So for divergence, okay. So guys, all of the answers to your question should be in the recording. This is all recorded, so I'm going to post it to all platforms of where all of you guys are, where everybody's following. Okay, so so what's your question, Mercy? I'm gonna answer that question too. I know supply and demand is kind of like that's kind of a new concept for a lot of people. It's the same concept. If you're asking where do I see demand, I see demand as an area where it reacts really strongly, and you'll have to write this down because there are 3 criteria when it comes to demand. Demand is simply an area where it moves and reacts. That's all supply and demand really is. That's all resistance and support really is if it comes down, touches, reacts really strongly and fast away from the area, boom, touches, go back, and it reacts strongly. See, now demand has already been broken in USD JPY, so boom, we already know that, we're looking for another supply and demand zone. And if we come back and draw it out, long story short, there's another demand zone right here. So going over NZD JPY, well, NZD JPY, the reason why I took this sell, I don't know what you guys are expecting from this, from me just answering this question. Awesome, Mercy. I'm glad that you get that. So what I really was looking at is the demand zone and how many times it touched. It touched 1, 2, 3, 1, 2, 3, 1, 2, 3, 4. It just touched multiple times in this one specific zone, and that's where I just decided, okay, great time to sell. Boom. That's really all I did. And these right here, these support areas, that's where I put, like, this is kind of like your demand zone, a miniature demand zone, which it very well may be a demand zone. I can't be who am I to define what a demand zone is specifically, but I do know that I put one of my take profits right here for a very good reason. And that's because, there's a lot of accumulation in these areas and where it moves strongly back down to. Same thing with, my second take profit, it's an area where price moves very, very strongly away from these lines. So, all right. So with that being said, guys, man, there were 67 of you guys on this Zoom call, on this trading call, and I am so grateful and blessed. Let me go ahead and stop my sharing really quick and take a moment and show my face while we're doing this. I just want to say that I'm super happy and grateful for you guys jumping on this call. It means the world to me, not only because I love teaching personally. I have been teaching people for literally, I don't know, 4 or 5 years now. That includes just teaching, men boys how to become men in the Marine Corps. That's sales, teaching people how to sell, sales. I'm in door-to-door. I'm a door-to-door fanatic. I love door-to-door sales too. So I love teaching people how to sell, but more importantly, I love teaching, Forex simply because I believe in the product of education, because it can help so many people empower and enrich, and just completely change their lives in so many ways that you know, a lot of us never thought possible. I've seen the changes in myself. I've seen the changes in a lot of people, and I'm super happy and grateful that you guys jumped on today. With that being said, guys, I want you guys to have a blessed evening. Now we're going to go ahead and transition into, you know, the Millionaire Mentorship Call. If none of you guys, if there are people in, if you guys are in iMarkets Live, they're getting ready to start the Millionaire Mentorship Call here in a little bit. I'm not sure when. I don't remember all the times. But Alex Morton is going to be hosting it. It's going to be a great call. I know every time that Alex Morton does these calls, you know, it's completely mind-blowing because I learn a lot from him. But with that being said, guys, I'm going to host more webinars with you guys. I will host more webinars. Be patient with me because my my time is, you know, kind of limited. But with that being said, guys, thank you guys so much for tuning in. Have a blessed evening. Have a great week. Have a productive week. And I hope you guys, I hope to see you guys soon. Thank you guys. Love you guys. Peace.